The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 4th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to get a hole in one. But the second easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it up to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we're beginning our day here with a rally in all the U.S. indices that you and I track. The Dow is up 491 points, the S&P 74, 323 for the NASDAQ 100, 27 points for the Russell, 187 points for the transport, 61 points for the semis, 304 for the composite. Gold's up 27 bucks, silver's up 39 cents, light sweet crude back 56 pennies. Now, those of you in the Tiger's Den, those of you that are listening elsewhere, YouTube or what have you, that have been longtime listeners know what? Was today's rally to be expected? Was today's rally to be expected? Yes, it's pretty simple. Was it to be expected and anticipated? The answer is absolutely. Why is that, Stevie? Well, first of all, if we take a look at now, I don't know if this is going to, no, it's not going to show us the one-day rate of change on a percentage basis, but you can calculate it by looking at the close on Thursday versus the close on Friday of the spot VIX. It was up some 20% out there. When we have a spot VIX index that closes above plus 10%, we get a bounce or bottom. We very likely get a bounce or bottom the very next trading session. I reminded subscribers of that yesterday afternoon. I had folks that actually were thinking that to jump on the short side of the train, which was why I really put out that newsletter to say, hey, hold on a minute, folks, here. Let's take a look at what's transpired in the past, what to expect and anticipate. Now, when we get those one-day rates of change above plus 10%, what we like is synergy. And when I say synergy, we like to see bottoming patterns. Where is it? We like to see bottoming patterns for each of the four equity future contracts. And the ones that we prefer are the Rhodes Momentum Indicator signal. And the reason is because the Rhodes Momentum Indicator pattern is nothing more than kind of like being in your pool, taking that ball, pushing it down with your feet. You can balance it for only so long before it blows the heck out of the water. That's what a Rhodes Momentum Indicator signal does. We can see that as in the signal was present at 2:30 yesterday, at 2:30 on Friday afternoon. So those that follow me, those that follow this pattern, and you should, and I teach it, right? So subscribe to Mastering Probability. You can do it for 29 days. Costs you zip, basically, and you're going to get tools that you'll use for a lifetime. For example, such as the tool of the Spot VIX Index and its one-day rate of change above plus 10%. Now, we had Rhodes Momentum Indicator bottom that formed in the ES. We had one that formed and confirmed inside the Dow. Now, the Dow's confirmed at 12 noon. Actually, on Friday, 10:30 in the morning for the Russell 2000 on Friday, and the NQ confirmed it at 2:30 in the afternoon. We also had some TD9 count tops that formed late last night, then early again this morning. Those have been negated. I would say it's the NQ that is pulling us higher, and the NQ's next resistance level. Now, this is on a 30-minute basis. We'll look at some other time frame charts out here, but the next resistance level is up at 23,342.50, and that is the NQ's 30-minute TD9 count breakdown resistance level. So the answer to the question is absolutely yes. You, me, everybody should have anticipated just simply using that tool being the New York Stock Exchange one-day rate of change, the spot VIX index one-day rate of change, but we must combine that with the equity future contracts and preferably the 30-minute time frame chart. For reasons I don't know, it typically produces the best result of that set of the pattern. Now, the one-day rate of change right now in the spot VIX, let's go back to that. Let me close this set of charts out here, just free up some resources. Somebody in the den, can you tell me, because I don't have my black background system on. Oh, no, I can figure this out. I think the one-day rate of change at one time was trading below minus 10%. I've been sharing with you or discussing with you the above plus 10%. Well, there's a minus 10% rule as well. Oh, no, I can't see it here. Let me get to this chart. Sorry. Well, let's just see where we're at with regard to the spot VIX index, which is down by minus 10.5% right now. So if we close below minus 10%, what that triggers, and I wish I could put the my black background chart up on my screen, but those of you that have been longtime listeners, you've seen that chart many, many times, and you know that we have the exact opposite. When we have a one-day rate of change below minus 10%, no idea whether we'll be there at day's end or not. What that triggers an initiation move to higher price out there. So all of this was anticipated, utilizing the tools that we share here with you each day. Now, this week, I won't be able to be with you on Thursday and Friday. We'll be visiting two of my grandsons, and we got another one that is in the oven out there. So that will be fun. So I won't be able to be with you. I won't host a show on Thursday or Friday out there. We'll be back on Monday. So let's go take a look at the daily equity future contracts. Let's go see what they're doing as we speak right now. And what do we have to be looking at here? Here we can see then the ES Mini that not only did it close below profile support, that bullish structured profile support, that's in the upper left-hand corner, it also crashed right through its TD9 count breakout level at 62.88. Now, closing above that today suggests that that would be a false breakdown. The ES Mini had 5 consecutive sessions to the downside. That was another signal that we should expect or anticipate some kind of rally. Of course, the NQ gave us the best signal of all, that signal being price getting back to its TD9 count breakout area, 22,803 and holding. As an example, if we open up, this is a cool thing about these little dance steps, about the that the markets make out here. And if we take a look at coming off that April 7th bottom, this is the NQ that we're taking a look at, what we can see is all retracements have been either 2 or 3 bars to the downside. And what was Friday for the NQ? Well, that was bar number 2 to the downside. So really not a surprise that we see a rally here. Is this just going to be a one-day rally? That I don't know. With regard to the NQ, that's not going to be able to give us the information to let us know if that is or not. Well, with this exception out here, if we close below the bottom of its daily profile, and we could easily do that, the bottom of the daily profile is 23,162. If we close below 23,162, we'll have 2 consecutive days below profile support. And then that would say, if this is only a counter trend rally, price would find resistance all the way up to the 23,325 level. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So let's get to some of our requests that have come in. The first one, give me a moment to actually get there, is from Nitram Inside the Den. Let's take a look at here, symbol OPEN. As we take a look at open out here, on a monthly time frame, not really a ton here that I can provide to you. Let's see what profile levels we've got. Well, we got a profile resistance at $1.85. We're trading at 221. We closed last month at 184. That's too funny. We closed a penny below that. But look, trade above profile resistance on a monthly basis is a good thing, Nitram. Let's take a look at the weekly time frame chart. The weekly time frame chart has us trading above profile resistance, which is at $1.40, so that's good as well. We had a rally that lasted for 5 weeks. Last week was the first pullback. Maybe you're going to get a 2-week pullback here as well. If you do, support would be down at that new profile that is forming below price, so about $1.40. If you look at the daily time frame, we have a consolidation with inside its profile. Now, you've got that big old bearish shooting star candle out there. Did that complete any kind of a pattern? None that I can see out there. So there wasn't really a top. Not that it didn't top, because, you got price up to $5. We're trading at 221 right now. But it didn't have one of those topping patterns that I use to help us identify what the market is doing. Right now, what we have is the market is consolidating with inside a fairly wide profile out here, Nitram, and it is bullish in structure. So you have the buy zone between $1.19 and $2.03. Percentage-wise, that's a pretty gigantic move. And then you got resistance up at 413. Now, what price is doing, as you can see, it is attempting to get above that green oscillator and change line. The current print on that is 226. We're trading at 221. If price were to close above 226 for 2 consecutive sessions, it's going to increase the odds that it's going to make a run for that $4.13 mark again. When you're inside a bullish structured profile and you're able to close above the center of that profile, And obviously we're above it. The center's at 203. We're at 221. But we also have that oscillator and change line, and it's green, and that's a bullish signal. So if we can, it tells us we have a rising price oscillator. Now, when, or it tells us the price oscillator above zero. When price is above that green oscillator and change line, tells us we have a rising price oscillator above zero. Those are bullish conditions, period, end of story. So it's really going to be about the OUL, which is at about the 226 level. Maybe let's just make it 230 for the day. You close above that for 2 consecutive sessions, and open wants to run then to the 413 level. So, Nitram, hope that helped you out with regard to OPEN. Thanks so much for your request. Duncan wants to take a look at ticker symbol APLD. So let's get that up on our screen for us. APLD is trading out at 1361, and at the moment it is trading above its TD9 count breakdown resistance level for its daily time frame. That's 1328. So, Dunk, a close above 1328 would suggest that it would make a run for its recent highs. Now, the recent high from a daily standpoint was June 6th, and that high had volume of 182 million shares. Now, on Thursday, we moved into a 138. Friday, we were up with 50. So far today, we're up with 20 million. So we're about a 60 million share a day going into 97 million shares out there. Just says that it may not be able to take out that high. What we were really looking for, Dunk, was to be inside that swing point with volume. Because if you do that, it increases the odds that you're going to go test that high. So right now, uncertain, but conditions are bullish with price being above its green oscillator and change line and profile resistance. The same is true for the weekly time frame. Now, the weekly time frame swing point has volume. This is the week of June 6th as well. This has volume of 104 million shares. Last week, we were in at 261. So maybe the daily didn't give us the numbers we were looking for, but the weekly most definitely did. Now, what that would suggest to you and I is on a weekly basis, price is going to make a run for that high, and that high is at 1542. If we take a look at the monthly charts, let's see if these things will populate a bit. We see. It looks like this was a sell the D point top. That would look like this out here. The only thing is that, I don't have a retracement tool, an easy retracement tool. And the question is, I'm just going to move this over, was that low that we just had less than a 0.786 retracement? That's what I'm referring to as April of 2024. Look, whether that is a sell the D point top or not, it doesn't necessarily matter at this stage of the game. Price are going to make a run for that high out there. From a monthly standpoint, that was the high from March? March. June. June of 2025, 1.7 billion shares last month. Wow, half the volume out there. Nonetheless, the weekly is really telling us the picture here, Don, and that price should be able to make a run for those highs. So hope that helps you out. Hope that's what you see as well. Thanks for your request. You also wanted to take a look at SoFi out there, SoFi. Now, that would be a cool stadium to go to, baseball stadium to go to, that's for sure. If you're into baseball. If we take a look at SoFi out here, it actually has, so it's got a Rhodes Momentum Indicator top. It's got 2 bearish shooting star candles out there. And it actually, the second one, created an island top reversal. All right, so I'm not going to get too into that at this stage of the game. Right now, we've got a top on the daily time frame for SoFi, Duncan, with price consolidating or trading with inside its daily profile. And your key support zone, because this is a buy zone, is between 1997 and 2073. Price hit that buy zone and rallied on Friday, hit that buy zone last Wednesday, hit the buy zone this morning. So that buy zone is a pretty strong area of support. And the reason why that's important for you to know is because if you do get a close below 1997, odds favor you'd see a move to 1752. So we just have a sideways consolidation in SoFi on the daily time frame. The weekly time frame, I don't know, did it complete an A to B equals CD pattern on the upside? Let's draw that in here. This one we can draw in, but it doesn't look like it gave us that sell the D point signal, but let's just make sure here. Here's A to B. I'm going to move that over to the C point out there so you can see we made more than a 1-to-1. So you've got to sell the D point on the weekly time frame. That's this bearish engulfing candle that formed the week of July 25th. That says in order for that pattern to get negated, you would need a close above 2274. So this is suggesting, and you also have a new profile formed last week. Support at 1508, resistance 24 even Steven. So what this is suggesting to you and I, you got the daily top in SoFi, the weekly top in SoFi. If price can get below 2073, that's in that buy zone. It should be able to make its way towards 1928. Now, 1997 is the bottom of that buy zone on the daily time frame. So there's where your battle's going to be. I don't know who's going to win, who's going to punch who out here, but you've got tops on both of those. You got to really keep an eye on the daily support zone. The monthly time frame chart looks very fine. So as soon as the weekly and daily are done doing their thing out there, what the monthly chart is telling you that it wants to continue to move higher out there. Now, we have moved higher for 4 consecutive months. Last time we moved higher for 4 consecutive months, we actually moved lower for 4 consecutive months, and that was back in it was July of 2023, which was the 4th month to the upside. We've got the 4th month to the upside in 2025. Interesting, huh? So I'm not saying that it's going to follow this pattern from an analog standpoint. But it does have the potential, doesn't it? It's got the setup there. So you're going to really watch the daily time frame, Steve. You're going to watch that buy zone. If we lose that buy zone, you and I, we should take another look at this. Steve Rhodes with TFNN. We come back to this break. We're going to look at, I believe it's Spotify for David in Panama City. At least SPOT is the ticker symbol. Yeah, there's an A to B equals CD pattern, Mr. Bill, but there's no bearish reversal candle. So, no big deal there. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So you guys catch that baseball game last night? The Phillies and it was a pitching duel. It was a total pitching duel. You know, you don't see too often. At least I don't see too often. Not that I catch that many ball games, but you don't often see pitchers, you know, make it through the eighth inning out there. And what a great game. I'm an ex-pitcher, so you know I really appreciate not like what those guys were doing, but when I played hardball, you know, as a pitcher. And it was just extraordinary talent last night. So that was good. A lot of great sports. We had Mimi Rhodes, you know, a kin of mine. Just kidding. I wish. Make a nice hole-in-one at the Women's British Open. That was pretty cool. That was a pool play that she did. She bounced it off another ball. It was almost 2 hole-in-ones. There's almost 3 hole-in-ones in a row on the women's tour on that. Now, that was like a 95-yard shot. So it's which is, you know, you got to make it, okay? But, you know, most golfers, I'd take a 100-yard shot all day long. Not that I would make it like they do, but, you know, easily you can be within, you know, at that level, you should be within 5 yards max of on a 95-yard. Yeah, that should be. In any event, let's take a look at Spotify here for David. We could talk about sports all day long. Speaking of sports, though, I did something I have never done in my entire life. And that was I played 7 consecutive 18-hole matches in a row. And that's over 7 days. 7 days. The max my body typically can handle is 4 out there, and I was able to do 7. Yesterday would have been 8, and I decided to blow that off. But anyway, let's take a look at Spotify out here, and let's get to these. David's like, hey, Stevie, what's the upside target here? He needs to know. He's in a option trade. Well, David, if we take a look at both the daily time frame, which has formed a new profile, it is bearish in structure. And what's done here, well, I'll tell you my baseball story, Jim. You're going to love it. My pitching story is so if we take a look at Spotify, you have a new bearish structure profile that is forming today, and price is trading right up into it. I know it's a nice gap to the upside, but your sell zone is between 662 and 672.25. If you take a look at the 195-minute time frame chart, it is also trading into profile resistance at 672.25. So that's going to be significant resistance out there. As I look at my other time frame charts, I'm not seeing any kind of a topping pattern, but you know, topping can be just pulling right into resistance. What would you? I don't recall when your option trade expired, but watch this level. I'd say if we, the bottom pattern is on the 130-minute time frame chart. So I would say if price were to close below 618.92, man, that wouldn't be good for you. You'd be giving all of today's gains back. I'm not sure how you're going to totally manage this trade here with knowing that price is running right up into resistance. Let's see. You know, you've got this gap to the downside that formed on July 29th, David. That had volume of 11 million shares. Today, so far, we're up with 2 million shares. So we're like a 6 million share day. Price also running into its oscillator and change line. You know, so you've got some pretty stiff resistance here. If price can clear 672. Then what you'd be looking for, then your next question would be, can price clear the 691.34 to 706.95 level? Now, we closed below the bottom of its bullish structured weekly profile. Last week was the second consecutive week below that level. That's where a counter trend rally would run. Now, it may not be a counter trend, but I'm giving you the levels that with, you know, the next levels above 672, you got reset at 691 and 706. So you've got to do the math on this. You know, the 15-minute chart isn't really giving us a ton of information other than I do see a small series of lower highs for the higher lows for the most part. 677 is resistance on the 30-minute time frame. I specifically went to this multi-set of time frame charts for you because when I pulled up Spotify, David, I noticed that we were trading into profile resistance, and I wanted to see, you know, are we also at topping signals on the intraday charts? So we're not there, so that's why it doesn't make this decision here very easy, but it's an option trade. You're in the money, I believe, and you're right up at resistance. So that's the best that I can do for you today. Hope that helps you out, and best of luck to you. Night Tram wants to take a look at that ticker symbol U out here. Let me see if I can find where I put that. Here we go. And United something or other, I believe, right? It's a software company, I think you were saying. Doesn't really matter what it is. What it's doing, though, Nitram, it's trading right now with inside its daily profile, and that's between the range of 37.20 up to 36.87, 36.87 being the top end resistance. On a weekly time frame, we're also trading inside a large profile. You have support at 23.85, strong support because that's both the bottom and center of his profile, and resistance at 35.60. On a daily time frame, I see a sell the D point top out here, but price pulled back, found support at the bottom of his profile until Friday when it closed below profile support. We're back above it today, so that profile level seems to be pretty solid. If you were to see two close below 32.70, we're likely then to get down to the 29.17-ish range. That is the weekly oscillator and change line. I do not have a topping signal or pattern on the weekly time frame, nor do we have one on the monthly time frame. Now, the monthly time frame is taking on the level where a counter trend rally would come to an end. For example, last month, the close was 33.36, where the counter trend rally would come to the end would be 33.35. Okay, you got me. Closed above a night trend by 1 penny. 1 penny isn't good enough for Stevie. 1 penny's not good enough for you. But it is good enough, the mere fact that we are trading above the center of that profile right now. A close above 33, 35, or as long as price continues to trade above that, that is a bullish directional type signal for you. It's only month number 2 that we could be looking at to the upside. So it does look like Unity Software, I think is the name, U out here, does want to rally. That's what I've got for you on you. Hope that helps you out, Nitram. Dan writes in and wants to look at ARWR. I didn't get a chance to set those charts up ahead of time. Let's go ahead and put that up here. ARWR. See what this thing is trading at. Give me a moment. I'll tell my pitching story. So Jimmy says, "Were you Stevie Curveball Rhodes?" I did have a nasty curve. Here's my pitching story. I was really a third baseman because I had a very strong arm. And we also had a good, and the shortstop was one of my best friends. So we had that side of the field covered, and we were playing in a game, and we had basically been through all the pitchers. And so the coach calls me in. I'd never pitched before. Coach calls me in. He said, "Look, Rhodes, you got the arm for this. Just throw it, just like you're playing." And Greg was the catcher. He's like, "Just like you're playing catch, just throw it at him." That first toss that I sent, right-hand batter, I'm a right-hand pitcher, struck the guy right in the gut. I mean, and the ball was traveling, I'm sure. So the very first guy that I pitched to, I hit. What do you think the other guys in the dugout were saying to themselves? Anyways, I made it through that, ended up, that was my pitching career. Everything was happening for me. I was a bit more careful from that point forward. When we come back from this break, we'll look at ARWR, we'll look at UAVS for Dan inside the Tiger's Den.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Hey, GTE, if you are listening, I would imagine you are. The email that you sent me, I didn't see what the symbol was that you wanted me to take a look at. So if you could resend it or let me know what you're looking at, that'd be great. Dan wants to look at ARWR. He's inside the Tiger's Den. And ARWR is trading right now with inside its daily profile. It's a bullish structured profile. And Dan, if today closes above its green oscillator and change line, that's printed at 1639. Stock is printed at 1648. It very likely will increase the odds of move to 1732. The top of its profile. I see nothing on the weekly chart to stop that from happening. In fact, I would say 1732 to 1782 would be the upside price target. There's nothing on the monthly chart to stop that from happening. The monthly has a wave number 7 bottom signal. The weekly has a TD9 count bottom pattern out there. So all that looks pretty good. I don't see any kind of topping signals for those time frames out there. The daily had a Rhodes Momentum Indicator top, but we're back inside this profile, so watch the close. Again, a close above its green oscillator and change line at 1637 ought to get us to the 1732 mark out there. You also want to take a look at UAVS. Let's go ahead and pull that up on our charts out here. UAVS is trading out at $2.09. Now, this is also trading with inside its daily profile. This is actually a slightly bearish structured profile. Now, if you look at the center, is at 221. Tops at 268, bottoms at 151. You can see it's just slightly offset to the upside. I mean, the center's not directly in the center, but it's pretty close. So I don't know if I would really consider this a true bearish structured daily profile for UAVS, and therefore I'm not going to say that it's going to make its way down to the $151 level. Not that it can't, because price is trading below the center of its profile. So that's an area of support that it has lost, and its green oscillator and change line. So $151 would be support. Resistance right now is around 221 to 226 out there, and above that 268. So on the weekly time frame, if I pull this back far enough, see if we can get anything out here. So the weekly chart, Dan, is positive from the standpoint that you have I see a profile change in trend for sure. I don't see any kind of a top. And as long as price remains above $148 out there, things should continue to move to the north side. If we look at the monthly time frame, now here I don't think I'm going to be able to get, I can't get squat there. I'd have to turn off a bunch of indicators. So that's the best that I can do for you on UAVS. Is said move lower for 5-6 consecutive sessions out there. So certainly at least a 2-day rally on the daily time frame up towards that 221, 226 level ought to unfold for you. So thanks for the request out there. I see a number of folks inside the Tigers Den, ex-baseball players, who isn't, right? As kids, high school, college, or what have you. And it is really a great game. I'm actually going to go see the Tigers in September. So I'm getting together I grew up with 5 guys. We've known each other all for, one guy I've known for 64 years, the other's 61, maybe 62 years. We're all going to get together in September, and we're going to go see a Tiger game and do a bunch of other stuff. In any event, let's get to the next request out here. Let's take a look at ticker symbol KRO. This is for Brent in Martinez, California. Brent says, I was doing some stock search over the weekend, found a few that piqued his interest. Each of them he's looking for a potential bottom. The first one is KRO. I think that's Kroger. And he looked at the longer-term chart going back to 2009. Does your chart show anything that would indicate the support level in this range? So the monthly time frame chart, I'm going to go ahead and open this up since Brent had referred back to it. And what we can see here, first of all, the thing we can see on a monthly time frame, Brent, is a negated TD9 count bottom pattern, and that formed last month. We do have the potential. Nah, I'm not going to go there. I don't see that. I don't think that was a valid wave number 7 pattern. So this is trading. What Brent's looking back. No, actually, Brent, you said 2009, but let me pull this back even further. Well, I have to add more data to get there. Let me do this. So you referenced 2009. Let me put up about 7,500 days. That ought to get us back there. So you say the same bottom that we saw in 2016. Okay, so here's what we're looking at on a monthly basis. So particularly KRO, don't know if it's Kroger or not, we had a wave 7 bottom that formed in February of 2009. It was Rhodes momentum indicator signal. It was also present. That confirmed that bottom in August of 2009, and that led to a very nice rally. We then get a higher low back in January of 2016. January of 2016 was bar number 8. February of 2016 was bar number 9. That gave us a TD9 count bottom pattern. It also gave us in February of 2016 a Rhodes momentum indicator bottom. So yes, I see, and in both those instances, price was below profile support. We are below profile support now. We've broken through a TD9 count bottom, so that pattern has gone away. There's A to B equals CD patterns that are present, but maybe some other pattern is going to form out here in KRO for you. I won't put in the A to B equals CD to the downside because it's quite a bit further, I would think. Yeah, it's quite a bit further to the downside out there. So I don't have a bottom signal for you, Brent. I would say coming off of the high, this TD9 count top in June of 2022, that's where I would start my Chapman wave signals, and that only gets us to wave number 5, letter E out there. So I don't see on a monthly time frame the bottom that you're looking for. On a weekly time frame, Kroger negated Rhodes momentum indicator bottom last week. It needs another, and it also negated a TD9 count bottom pattern on June 20th out there. So it's got a lot of pressure to the downside out there, weekly and monthly time frame chart. Now, the daily's trying to get in on the action, saying, hey, Stevie, look at me, look at me, look at me. We are looking at you. And it was trading down for 5 consecutive days. We've got a nice little rally today. Now, this rally is confirming a Rhodes momentum indicator bottom. Is it also wave number 7 to the downside? Let's take a quick peek here, see if we can try to figure that one out. CDG, where'd we go? The answer is yes. So, I'm going to go with no. So, look, it doesn't matter. You only really need one bottoming pattern. And today, if we continue with this bull sash candle, you're going to have a Rhodes momentum indicator signal. I think what that's telling us, Brent, is that we're just looking at price rallying up towards its oscillator and change line on the daily time frame, and that's about the 569 level out there. Of course, the good thing is you know that if you see a close below Friday's low at 511, that's going to be a signal that we're going to continue to head lower. That's assuming that we have this daily bottoming pattern that confirms today. So I hope that helps you out, Brent. Let me think the folks in the den would like to know the other ones that piqued your interest other than KRO. So you're welcome to send those in. Kevin writes in and says, sorry, I missed the beginning of the show. Do you see the SPY as a bounce only and not a new trend? So to answer that question, Let's go to the daily equity future No, let's not do that. Let's do this. How am I going to answer this question? I'm going to do this one step at a time. I'm going to come back here, and what I am going to do is I'm going to first put up the ES Mini, since we are going into the really last segment of the show, and I've gone through all the questions out there. So I'm going to put up the ES Mini charts out there, and really come back with the synopsis for you. But the first part of the synopsis, let us not forget, if the spot VIX index closes lower by something below minus 10% or even lower than that, you will get a initiation to higher price signal inside the New York Stock Exchange. And that would say we had higher. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So Kevin is asking, is today beginning of a new trend or just a counter trend move out there? So the market's going to have to answer that question for us, Kevin. Here's what you're looking for. First, the spot VIX is trading lower by less than minus 10% out there. That's an initiation to higher price signal. However, I'm going to qualify that statement. And the reason I'm going to qualify that is what we really need to see to suggest that we're going to head to higher price is not just a spot VIX that's below minus 10%, but a spot VIX that closes back below the 50-day exponential moving average. The 50-day right now is printed at 17.99. We've been down to as low as 17.84. So far, we have a test and rejection of that level. If we close above the 50-day exponential moving average, and then it could be just a one-day rally out there. So that's the first thing that you're going to look at. The second thing that I think you're going to pay attention to, actually, is going to be, because we like to see synergy here, good or bad. We like to see synergy because it gives us more confidence in the signal. Well, the signals that I'm picking up right now are coming from a 2-hour time frame chart. The 2-hour time frame bar that we're in right now completes at 12 noon. That says by 2 p.m. we could have TD9 count tops, but more importantly, by 4 p.m. we could or should have completed TD9 count tops for the 2-hour time frame chart. At this stage here, if we go, so you've got, this is also another area to be paying attention to. I would say, Kevin, at least at this stage of the game here, that probably these 120 minute charts are really taking us into a rally towards the end of the day, maybe the next couple hours or what have you. And it's really going to be the overnight session that's going to help us answer that question. Are these TD9 count tops just a pullback to support and we continue to move higher? I don't know the answer to that question out there, but those would be the things that I would be watching for to give us a good signal out there. And then the other is obviously going to be the NQ out here, or anything inside the NASDAQ 100. If I take a look at the daily equity future contracts here, if we close back inside profiles, and here's the thing: the NQ is strong and the Russell 2000 is strong. In bull markets, that's what you typically see. Anyways, folks, have a magical Monday. I'll see you tomorrow at 11 o'clock on Terrific Tuesday. Take care. Be safe out there.